If I'm going out into self-storage right now, I'm brand new. I've seen some possibilities for good investments. I've got maybe a deal I've got an LOI on or something. How do I go to an investor and say, hey, I've never done this before, but here's this opportunity?
Yeah.
How do they know that this is an opportunity with me? How do I build my credibility for those investors being new?
Welcome everybody to Self-Storage Income. And today we're talking about money. That's right. How to get money for your first or frankly any storage deal. And a lot of times we look and say, okay, this may be directed towards a beginner investor. And sometimes it literally is. Like, this is for the beginner. This is something that, of course, a beginner investor needs to know, but it never ends. And that's the key with this subject, and why it's so important is because it never ends. It will always be the top concern or priority when you're doing commercial real estate or any kind of real estate is, how do I pay for it, right? And so how do I get money? How do I get investors? How do I get bank loans? Where does that come from? And how does it look? And that's what we're really diving in today.
It is, man. I'm excited to talk about it because listening to you talk about it, listening to even our friend Pace Morby talk about it, he talks about raising capital being one of these most important skills that you can have starting out in real estate, business acquisition, all those things. But going back to the experiences even that you've shared as well, if you could start over now today at ground zero, you'd be using OPM, other people's money, bringing in investors a lot sooner than you did.
Yeah, absolutely.
We talk about the velocity of capital, how that works. And had you started doing that from day one, or even, the first couple of years,
totally different game.
Would have been totally different. So I'm excited to dive into it. There's so much opportunity and so many different things to think about and consider as we're going through this.
And we've learned so much on what to do, what not to do, all the things we've made mistakes on. And two, a lot of beliefs that I think that I had that were completely wrong. And that held it. So it's a really good topic, one that's really pertinent to today. And one that never ends. Once again, this is a topic, you guys, that will always be discussed because the importance never ends, but the landscape is always changing. How you raise funds and how you finance is very different from 2-3 years ago. And that landscape has changed from even a year ago today. Dramatically. The last 3 months have changed dramatically. So we're going to dive into a lot of this stuff and share what we're doing in our secrets. Now, before we do, guys, I've got an ask though. So me and Connor, we come on here and we love to provide value for you guys. We love giving away all these free tools, which we have. Literally, we have that starter pack in the link below. You can go get completely free. We love being very open, producing all of this, give our information. What we could use your help on though, and this is an ask, is if you could make sure, if you're on YouTube, to subscribe and obviously like and comment. And I know this gets said a lot, but you can't underestimate the importance. It's really hard to over-exaggerate the importance of it. The next thing is, if you are on iTunes, I've got a beef with iTunes. Connor knows this because we got over 700 reviews. And then they came in and it was some massive number. We dropped down below 550. Never an explanation. We have no idea why this happened or anything else. And then we have been constantly trying to get back up, and we haven't gotten above 600 again, which makes no sense at all. We've reached out to iTunes. We're not sure exactly what's going on. So if you guys could leave us a 5-star and a great review, guys, that makes a huge difference to us, the platform, and what we're doing here.
It really does. If it's just a one sentence thing, or if it's just leaving the review, nothing crazy, one word even, great, whatever you want to do, that really helps us out a ton. Go drop those bombs in the review section for us, blow the thing up, and let's get those things built back up.
Takes you just a second to do, and we'd appreciate it. All right. Now, with that, our ask, everybody, we are going to talk about raising capital, and that has to do with what I just did as well. It's an ask, and I think that you have to understand, first of all, the approach that you're taking. When you're raising capital, people are like, I don't want to ask for money. And I've always talked about how, well, neither do I, and I don't. So I'm not asking for somebody to give me money. I am showing them an opportunity for them to make money. It is not the same thing. One, I feel weird about and I don't want to do. The other one, I don't feel weird about at all. In fact, it's the opposite. It was everybody was asking and everybody wants opportunities. Mm-hmm. And so I was simply filling a need that the market had, just like anything else. And because I believe obviously in the product, everything else, I stand by it. I stand by this industry, what it is. And so I'm like, yeah, I have this great opportunity. And I was doing deals and we were making money and we had good deals. And people were like, can we invest with you? We're like, no. So I was shielding ourselves and not allowing anyone to have opportunity. People were trying to give us money, right? People want to invest in opportunities. And this is a thing that I think a lot of people get confused on, is not everybody's the same, okay? So some people do not want to at all play certain roles. They don't want to be an active investor, right? They don't want to take on certain liability. They don't want to do certain work. They don't have time, and they never will. That's not a goal. That's not something they're trying to do. And that's okay, everybody. All the listeners on this podcast, we share all the information. Some of you will want to invest in self-storage, but you don't want to be an operator that's listening right now, right? You're looking for opportunity with a good operator to invest in. Other people are saying, no, I want to do everything, like everything. I want to start out on the ground. I want to learn everything. That's awesome. Then you have other people that are like, listen, I want to be an active investor, but I do not want to do property management. I don't want to do any of these stuff. I want to do it, have my own job, keep working. That's great. Then you have other people that are like, I actually want to raise funds for this. Or people that are, I just want to third party manage. There's so many ways to go about investing, okay? I think we get lost in the fact that, and I do all the time, where I'm like, well, if I do this, why wouldn't you just do exactly what I'm doing, right? Then I have to remember, oh yeah, I worked for 10 years, 2 jobs, didn't get paid, invested all my money, right? Everything else. I was younger. There was all of these things that when I look back at today, I would not do it that way. So even myself, I know that I would do things different because it's a different market. It's a different time. I had different goals and on and on and on. So first and foremost is to remember, just because you want to do that doesn't mean other people do, but they do want to participate. This was a big change in thought that I had to have, where I'm like, well, why would people want to give us money? Why wouldn't they just go do it themselves? And the answer was, well, how long have you been doing this? You have an entire company built around this. How much did you sacrifice? You're taking on risk. I'm like, well, yeah, but like people don't want to wait 10 years. They don't want to do all that work. They don't want to have to gain all of this know-how and trial and error in different markets. And they may not even have those opportunities because the markets were different or whatever it is. And I guess, you just don't think about that when you're doing something. You're like, I do this, I like it, so that means everybody else does. That kills the whole thought process of getting investors, because you, first of all, either become defensive or like, well, if I show them or this, they're going to want to do it. It's just not how it works. You're creating an opportunity for the marketplace and you're not asking, saying, oh, will you please give me money? So I want to get that out of the way first off, because I was one of those people. I did not want to ask people for money. I did not want the responsibility of other people's capital. Scared me to death. It still does scare me to death. But I had a very big change of heart. And that was when I was told, after building this big company, big portfolio of assets, where I'm like, that scares me. I'm terrified of it. I'm really, really concerned about this. And I don't want that responsibility, right? And I don't want other people to either lose their money or get mad or something like that. And the response to me was, that makes sense. You don't want the responsibility. That makes perfect sense, right? But once again, it's not that you're doing them a favor or something. You have an opportunity, and what you're saying is they can't take on or analyze risk like you can. And so they shouldn't, you don't want their money, and they can't make independent thoughts and decisions, and they can't make the choice to risk money.
Like you're forcing them.
Yeah, like I'm forcing them to do something. And I'm like, I guess I never thought about it like that, right? Where they are investing, they're with you investing.
Making a conscious choice.
Yes, they're looking at the numbers. These are active, credited investors that are investing alongside us. They're literally doing this to risk their money to make more money, just like I'm doing. Because that's what I do. I do it every single day. And when that changed, I was like, oh, you're right. First of all, I'm just not giving people opportunity to make a decision to invest, take risk, and go into those assets. I'm stopping them from even making that choice. And I looked at it as 100% of the responsibility was on me. I still feel that way, by the way. And that was the second thing is he was like, that's why you should actually take money is because you feel that way.
Yeah, no kidding.
And I just had never thought about it like those things because that is something that I knew would be a major driver for me. And I would be so overly concerned about it and so worried about it that I would do everything in my power to make sure that never happens. I mean, we had in self-storage the worst year in 2023, than we'd ever had, especially some of the markets we were in and everything. My company, we didn't take fees. So we had to put in out of our own bank accounts, pockets, our savings, millions of dollars to cover all the work that had to be done. Investors didn't even have to pay for that. That was just a decision we made because of that feeling that I have and why I want to just always be able to say, I've always risked more than you. I've always put more work in than you. If something didn't go, there's no one that loses more than I do. That doesn't even exist.
I think that's a really important piece where, yes, your investors do have the autonomy and are making that conscious decision to invest with you specifically for those opportunities, but they are entrusting us, right?
Absolutely.
And they are entrusting you to go out and make those hard decisions, to make whatever happen that needs to happen. And there is a huge responsibility there, for sure.
Two, there are not only a huge responsibility, but you also have all of a sudden varying beliefs. You have different opinions. And I think one of the hardest things for me was you can talk to a handful of investors and they'll all want to do different things. And they all think that they're right and also that theirs is the most important. We had an investor that literally was one of the smallest investors that we had that was like, you know what? I actually think that you should liquidate an asset because I have an opportunity I want to go take. And I was shocked. I looked at him and I'm like, you are the smallest investor literally that we have in this deal. You make up less than, whatever it was percentage. You're talking less than 1% or something like that. And you want us to basically do everything against what we said we were going to do and go against all these other investors and not get them. But that's how investors work because it is their money and they do think it, and that is their priority. That's also not wrong because that is their priority. But as the general partner or as somebody taking the money, you're taking the responsibility to have to look at people and make hard decisions and say, no, it may be good for you in your circumstance in life, but we're not diverting from the plan. We're not changing things to accommodate for one personal instant. That is an example though of how I have to then make decisions that may be contrary with people or that they may not like. But all the investors, that's why they gave us money, was for that very reason, was that we will make and do hard things and decisions that they didn't have the knowledge or couldn't do. That is a big responsibility. And I don't like at all having to have a discussion or conversation with that because they're not wrong. The individual that said that wasn't wrong. He wasn't a bad person. There was nothing. No, not at all. He's doing what's best for him. I fully recognize that. And I understand why it's an investment and part of his long-term plan, right? It's part of what he's doing and he needs to. That's great. And that's totally fine. And they should be looking out for their capital or investment. That protects their family. That is all of those kind of stuff, which I 100% realize. So I don't at all think it's bad, but I do then understand that weight is on me because I am the one that has to say no. Or you may have somebody that says, I don't want to sell because my tax will get hit and I have a bad tax year. So this is actually a really bad time for me to sell. I'm going to lose a lot of my return because I'm taxed at such a high bracket, especially this year because I sold stock or I made a huge bonus at work or whatever that is. Now, that is once again true. Their after-tax return will be diminished. But I'm also like, but I can't, your real return off the asset is there. You need to make decisions like invest in another deal, try to 1031 exchange, try to do things to actively lower your tax bracket. While other people, right, they don't have those same things. So we won't give up the whole for an individual person. It's why I have a few mantras that I think sound really bad at the first, because I tell this to investors, you're not my first priority. That sounds really bad, but hold on here. The reason why I say that is the asset is. The asset is my first priority. I don't kill the goose to try to get one golden egg. And also, if that individual investor was my first priority, then how in the world could I make decisions for other investors? So these are things you have to be prepared and think about that are real. This is real decisions, real pressure. You will never in the history of you investing have all your deals go correctly. Some will go south. That is a fact. We've always known it. It is because we can't control all sorts of things, right? We just can't. That is something I think that I also had to come to grips with. If I was going to do this, I also had to realize that at some point that will happen. Now, I hope it never does. It's never happened so far, and I hope it never does. But I also have to accept the fact that that does happen. That actually makes me a better investor because it makes me look at deals and say, and figure out what do we have to do to avoid something that we know is an actual possibility.
Exactly.
If I didn't think it was, I'd be careless and stupid. And if I thought that risk didn't exist and wasn't a real risk, I'd make bad decisions, right? Then you have timing, right? And all sorts of things that go into this. You have tax brackets, you have people that see things differently. These are all things you have to work with and take on. Now, I'm telling you all of what I think would probably be the bad right out of the gate. Right. And what I mean by bad is I mean just how you perceive it, the stresses and things, because we don't ever want to fluff this up and say that that's not true. Right. If you are taking on people's money and for some reason people think it's different when it's a bank.
Isn't it so weird?
You're taking people's money when it's a bank too. Yeah. So it's like, but you have a block to interface with the person that you're investing their capital. Now, yes, they have insurance and yes, it's not direct things. I understand that, but still. Right? It's still, you're taking someone else's money, whether it's a bank or whether it's a direct investment. So this is already something that you should be really thinking about. Okay. Right now, financing for real estate is really hard, even for self-storage. The markets are very challenging. Live Oak Bank is a specialist in financing for self-storage, including SBA loans. They are one of the leaders in financing all sorts of deals and deal size. We trust Live Oak Bank for their specialty in self-storage, their unique approach, and how they help their customers go through the process so there's no surprises. That in itself is a testament to their exceptional service and support. So whether you're looking to acquire, build, or expand a storage facility, Live Oak Bank has to be number one on your list to call. Click the link below right now so you can experience the difference that a dedicated self-storage partner can really make. Now, there's another aspect of this that I realized early on is that my capital could only go so far. That is just an inherent thing. And by choosing one way, I have downsides on the other. So we're talking about maybe some of the downsides of capital. There's a whole bunch of downsides that if you don't do it. And this is the thing when you're trying to build. There is no perfect situation. There is no good without bad. That doesn't exist. You don't get to play the game and not have consequences. If you want to play the game and not have consequences or have responsibility of those consequences, you can't be a player. That's just how it works. You have to be an observer. And that's okay. But if you take other people's money in the form of a bank or in the form of people, family, friends, or investors, you now have responsibilities towards all of these people. I don't think that's any different than life in general. I have a responsibility to my children. I have a responsibility to my community. I have a responsibility. I think it's my duty to take on responsibility just because I'm alive. I believe that, right? So I actually don't think it's a logical thing to say, I'm not going to do something that's good for others. I'm not going to build. I'm not going to make the world a better place because I don't want responsibility and I'm always just trying to avoid responsibility. This may seem callous, but you live a very selfish life. If you're 30-year-old, just traveling, not doing anything like that, which is fine. You can do it. You can do it. That's no problem. But if you're just living off somebody else, you have no responsibility towards anybody and you're living for you only, that is a great way to avoid all mental strain or anything else, right? But it is an extremely unproductive way for yourself, actually, to live life. So I've already accepted that as I go forward in life, I wanted to be a man. And by being a man, that means you take responsibility. I'm actually a firm believer in this because I'm taking responsibility over my family. I'm taking a responsibility over my spouse, how I treat them, everything else. So the moment I took a bank loan for a house, it was the same thing. The moment I took a loan for a car, this is all responsibility. When I start to look at it in those contexts, all I'm doing is changing who, how, or what, or when. But it actually doesn't change the fact that I do have responsibilities. And all those responsibilities has downsides, all of them. And that is a game you can play. All I can do then is choose. That is the difference. Raising capital, it actually puts that stuff in my control. So I can actually have control over what we're doing, the outcomes in my life, and how those things are happening. So by responsibility, taking it on and taking it in this form, because responsibility is not avoided, I can take that on. And then two, I'm also doing more, I'm sharing more myself with other people, with the banks getting a return, right? Then they can give returns to their shareholders. They can give returns to their the people that have their money in the bank. Because if the bank doesn't invest money, they can't give a return to the savings accounts, to anything, right? You can't get high yield because they don't have any money. So it is an impact that affects everybody. We don't go through this life and not get that. So once I accepted all those things for me, it changed the context of raising money. Now that's a lot. I just said a lot because I think that raising money is actually, that is the core problem. Everyone I've ever talked to, they don't say, I'm not raising money because, I just don't want to buy good deals or I don't want to buy more. That's never it. I'm not raising money because getting that check and processing that check and, then I have to go find another deal. I've never heard any of those things, right? Never, ever, ever. It has always been around the inner. It is that is a responsibility and weight. Whenever I hear that and somebody's saying I'm making the decision to not do this because of that responsibility and weight on myself, I'm like, you're the exact person that should be. Somebody that's taking money is like, well, forget them. They're making their own decisions, everything else like that. That's scary to me, right? So I understand what everybody's feeling for the subject and how we're talking about it. This is a very human thing that we're talking about, raising people's money. I don't want to try to get rid of that, everyone. I don't want to say, forget that. Don't worry about that. Dehumanize this, because it's not. I have people's retirements. I have people that have invested everything with me. I talk to these people. I know who they are. I know their kids, right? I have one of our investors, Heather, and she's been with us since the first deal we ever even had.
Day one.
And they've invested just continually, right? Everything with us. Her husband, her kids. And they have the cutest kids. I was just on a Zoom with her last week. And I think of these people. I think of these people who I have responsibility over, and we're in this together, right? I don't want to dehumanize this to make this like Wall Street, everyone, where it's funny money, lose, win. James, I don't want to do that. And I don't want to start that. We can talk strategies. We can talk about implementation, how to do it, which we're getting into and we're going to. But I just want to make sure that not only are we not dehumanizing it, but two, that we're also saying that it isn't a privilege and something that it should actually be gone towards for those that feel the weight of it. And so I would encourage you, if you feel the weight and you're cautious about it, that's actually all the more reason you should. And I do mean that. I honestly mean that. We should have people that feel the weight and responsibility. They make better decisions. Now, with that said, we can move on to people are like, okay, but I don't know how. I don't know how to ask for money, right? All that kind of stuff. First, we can talk about that, asking for money. I don't ask people for money. I don't do it. I have opportunities, and people that are looking to invest in opportunities, I talk to them about this opportunity that I have and whether they would like to invest in it or not. That is a very different thing. This is the same in any business. This is the same in anything else. We have good services. There's demand for it, right? If people want it, if they think it, if they agree, they can participate. If not, they can't. I do not want people that are like, if I lose this money, my life's gone. I don't actually want that. I want them to make good decisions. I want them to look at the assets right, because they are participating just like we are in the economy. And there's things we don't have control over. So I can never guarantee anything or say anything because we don't have control over the economy.
Exactly. And I think that's a really important piece where you just said, I've been in rooms where you're actively talking to investors that are putting everything on the line and telling them that exactly what you just said about guarantees. This isn't guaranteed, and you have to be okay with literally losing everything.
Yeah.
Because we don't have that control.
I don't have that control.
For sure.
No. It's like, then of course they ask, oh, well, have you ever done? No, we've never lost a deal. But that doesn't mean, like I said before, that it won't happen.
Exactly.
So once you get past that recognition and everybody understands in the same place, you never tell anyone ever that they're going to make it, that it's a sure thing or this. Don't talk like that. Don't use that number. Don't use that language. First and foremost, people that have wealth, that understand how these things work, immediately key into this and go, you don't understand what you're doing. That is just screaming, I don't know what I'm doing. And two, I'm missing all the danger because I'm avoiding it. It should be the opposite. You should be able to say all the things that are wrong and how they'll all go wrong. And this is why I tell investors, when 2022, I got so much heat and crap, even from the podcast, everything else, when people are like, you're saying there's a self-storage bubble, yet you're investing people's money. They couldn't fathom that. And my answer was, you should invest with the people that can see the danger, not the people that say that it doesn't exist. And I would be doing a disservice if I wasn't spending huge amounts of time to understand the danger to protect ourselves from it, which we did. We locked in long-term interest rates because we said inflation's coming. We're going to have higher interest rates. This is what's happening. And I detailed it in paper, everything else. I've talked about this. You can go back, record, watch, and see it. I was so open and transparent about the dangers that I thought was coming. People were like, you're actively like giving an argument on why not to do the investment. And I was. There's no secret around it.
Yeah, like here's the risk.
Exactly. And then I'm saying within this risk and everything, we have these opportunities and we like them because of these things. So I'm saying that there is risk and here's opportunities within it. Because actually when the risk is up there, that's when the most opportunities is, when it's the hardest, including today. We're finding better opportunities than we've ever seen. Now, people are going, well, interest rates go up. What will happen with the election on and on? I don't know. No clue. Right. I mean, a huge portion of our portfolio I built while real estate prices were collapsing, not afterwards, while they were. We were buying assets and they were worth less on market, not in cash flow, things like that, than when we bought them. Right. And people thought we were dumb. And I guess I'm like, I understand that. And I guess there's no argument. I'm kind of stupid. So all I know is I'm getting this much money in cash flow. And so it's good. I'll let the market do whatever it does. Right. And we protected ourselves during that time, though. The pain was real and it was known. That's the thing that I looked at. I'm like, I actually know the bad things. 3 years ago, 2020, 2021, there was nothing bad. All it was occupancies rising. All it was your rates were rising. There was not only nothing bad, you could have had a piece of crap and all of a sudden it was a gold mine. The bad was gone. Nobody could see anything bad. It was only up. That is the scariest time to invest.
For sure.
Just because you can't see it or understand it doesn't mean it's not there. It just means nobody sees it. That means it's even bigger of a problem.
And that's it. It's even worse.
It's even worse. I prefer the problem, the danger, the issues. When I can see them, they're obvious. And I say, here they are. This is why this price is down. That's how I invest. This price on the market is down for these reasons. Can I change those reasons or not? Sometimes the market is deteriorating exterior and interior value. And we see that through things like oversaturation. I can't change a market that is oversaturated. I can't. There's nothing I can do about that. Now, sometimes, though, it has nothing to do with the asset. It's a good, healthy asset. The market's great. But because the buying and selling of assets because of interest rates have changed that went down, I love that. Because I'm like, that I can keep the income going up. We can improve that intrinsic value, how much it yields, and then the market will do what the market does. So it's a very fundamental part of it, right? You need to express these things. If you get in front of investors, banks, anything else, and you say, this is basically like, sure, there's nothing, like, this is probably one of the safest investments you can ever do. People that actually invest and know, huge red flag. When you get in front of investors, you tell them out of the gate, I've never done this before. This is the dangers that we see. And you know why I picked this asset? Because these dangers don't exist. Because what happens is you are now wise, you are credible, you understand what's going on. It seems counterintuitive, everybody, but it's very true. Because if you don't say the problems and the weaknesses, they will find out. And then the only thing they know is you either don't know or you were hiding these dangers.
Yeah, you're not going to acknowledge it.
Either way is bad. That's bad either way.
For sure. Well, and as you were talking about that, and it actually kind of segues into something that I was thinking about, if I'm going out into self-storage right now, I'm brand new. I've seen some possibilities for good investments. I've got maybe a deal I've got an LOI on or something. Like you just said, I've never done this before. How do I go to an investor and say, hey, I've never done this before, but here's this opportunity?
Yeah.
How do they know that this is an opportunity with me? How do I build my credibility for those investors being new?
Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description.
We're saying you have an opportunity to sell. That's why people usually can't get started, can't get other people's money, because they're like, nobody will give me money. And I'm like, well, what opportunity do you have? Well, I don't have one, but once they give me money, I'll go get one. Oh, no, that's not how this works.
Opportunity first.
Opportunity first. And so it's also really awkward if you're trying to tell people to give you money, because now you're asking them, no, give me money, and then I'm going to go do something with it.
Well, then there's no details, right?
No details, there's nothing. They're like, what am I? I'm just giving you money? So you are asking for money.
Yeah.
It's not an opportunity. So let's kill that first. You talk to people high level to nurture and cultivate relationships that you could go and deliver an opportunity for. You're not asking for money. You're cultivating interest. What interests do you have? Do you look at this market? Hey, have you ever thought about storage? Have you ever thought about investing in it? You're cultivating and priming individuals that when an opportunity comes up, you say, hey, remember we talked 4 months ago? You say, I actually have a great opportunity. You want to check it out? Then it's not a cold thing. They've already expressed something. You're simply filling it. It's like somebody saying, I really want a toy bike. I'm trying to find a toy bike for my son. I want a toy bike. And then you're like, hey, I happen to sell toy bikes. Would you like to look at some of those? You're not going out and trying to get somebody to buy it. They're telling you, right? And so that's a bit important piece. Now, the way that you do it though, when you're like, I don't have that experience, is first of all, you recognize it. And then there's a few things you can do immediately. You need to overcome that flaw, right? And that flaw is real. So don't overcome it by saying it doesn't matter. That is amateur hour, right? You overcome it by building a bridge over it. And you build the bridge by taking care of those problems. See, as in, I'm putting together a board. Here are the representatives of the board. Now, I know what value looks like, but because I've never done it, there's probably lots of things that I might miss. So what I'm doing is I have this team, like people do this within our groups and everything. I get a feasibility study from this private equity firm that owns over 400 million in assets. They do this. They're going to tell us exactly what, and we're going to look at that. We're going to compare it over. I'm going to have third-party management companies also look at this opportunity and say, so I know what the opportunities are. We're getting third-party people that are experts in this. They're going to show us. We're going to show multiple of them and how they all see either the opportunity or risks. And then I am going to set up a board where I'm going to have 2 or 3 people help. I have on my team a fractional employee over here that this is what they do. I have a mentor that's guiding me and helping me with this, or I'm a part of this program. The amount of people that have put on that they're a part of the self-storage income program to banks and put on that, hey, we've got this or that, to show them I have a resource for knowledge. So instead, what you're doing, you're saying, this is a problem. It's a real problem. So here's all the things we are doing to solve it. And now guess what? It's no longer a problem. So it's not trying to say that it doesn't exist. It's making it so it's irrelevant. That's the difference. And you all do this, and I do it today. That's what building a company is. I don't know how to be an architect. So we hired an architect. Guess what? Problem solved. Literally, that's all business is I don't know how to do all of these things. So as the owner of the business, if it was all dependent on me, I could never start a business. I could never invest. Everything would fail because I am so limited on my scope of expertise. So you learn that you don't need to, though. You don't need to know everything. You don't, that no one has an expectation of that, because if you say that you do, everybody knows that that's false and impossible. So it's actually scary. Instead, you simply say, here's the team of people. Here's what they do. Here's how we cover our bases. Here's what we're looking at it. Market turning, oversaturation. Here's these reports, right? Debt. Yep. This is a great question today. That's why we have our debt broker, right? That is part of the program, self-storage income program that we use. We have a debt broker that's tied with them. So we had a bank, Live Oak Bank, who is the sponsor of this. They actually teamed up with our inner circle, and we give them the deals that we're bringing to the inner circle. They underwrite it. So they're underwriting our deals. We're then bringing that deal completely underwritten by the bank, saying how much they would lend, what they would do, what they like, what they want to see. So somebody gets it from the bank, and the bank's saying, yes, I'll lend on this asset. And here's what needs to happen on it. And here's what we need to do. And then we could say, you want to buy that asset, right? Then they will underwrite the individual. And we send them to the bank, they'll underwrite it. So then all of a sudden, that deal package, it has debt. They've worked with the bank. They've underwritten. They're underwriting the individual. And if there's any problems on either one, then we just solve the problems to get it done. So then the inner circle is sitting here going, great, I have a deal now, a storage facility like the one that we have under LOI right now. It's $1 million. The bank loved it. They're in there. They're getting it. They go to friends and family. I have a feasibility study. I have exactly how the opportunity is going to work. I have a bank on board. I have a third party that's an expert, right? And the bank's qualified me. I can buy it. All I need now is $200,000. And once again, you're not just relying on me. It's all of these institutions, all of this high end. It was brought on. It was verified. Because what we do is we underwrite the deals. We look at those deals before we bring them to the group. Anybody can do that. That's the point, though. And that's what I do to do deals. I have all of these people that help us go through it and do it. That is the key when you're trying to overcome the main barrier that people starting out have to come. Also, the main barrier people that are growing companies. This is the things that I've had to overcome. Growing companies, I'm like, we've hit a limit on people that know things in this. We have to go out and hire an expert. We have to go do this and bring them into our company, right? Because we've now exhausted our ability with these resources. And so when you do that, I'm showing people that invest in our company. I'm showing the market, the banks, everybody else, look at our team of people. It's no different, whether you're on your own or you have a company. The thing is, people think it's different. They think, oh, you can do it because you have all these resources, but I don't. Why don't you?
Yeah, where'd the resources come from?
They're all there.
Yeah.
They're literally all there for you. It's like you can do it and you can overcome those things. And then you may say, but I don't know how to manage. That's why we have third-party management companies. That's why we have the banks and other people say, here's what needs to happen on the management. Can you go automation, right? So there's never been a better time for first-time investors to invest because of the resources. The prices are the best they've ever been, and the help you get to do it. So with all of that, people feel confident to go then and say, I have an opportunity, here it is. Not just because I think it's an opportunity, but all of these people not only think it's an opportunity, all these people, including this bank, have already said they're going to lend on it because they like the opportunity so much. A completely different type of conversation with family, friends, or investors at real estate meetups, or people in your community going on social media talking about it. How confident will you be when you go and do it that way?
No, exactly right. I mean, make saying yes to the opportunity super easy for them. Make it an easy choice to look at everything that you have together. And it's an easy, here's the $200K that you need.
And you already know the downsides. Like you already know what their arguments are going to be.
And you can communicate through all of that.
And you can preemptively build a bridge over them.
Yep.
And so that's the key with raising capital. I think a lot of people, they expect this. It goes back to, well, as soon as somebody gives me $1 million, then I'm going to go find a deal and then I'm going to have resources, everything else. It's a chicken and egg thing that people don't even realize. No, you do everything else or you don't get the money.
Right.
Because once you've done everything else, people look and go, you know what you're doing. You've planned this. You've started this. You've got all of these great things going on. I am going to invest in you. It's very different than saying, I have this idea and I want to go do this, but I don't even know that I can. I don't have a deal or anything else. And they're going, this is risk, unimaginable risk, because I don't even know what we're doing here.
Yeah, you're wasting time.
You're wasting time.
Yeah. And
so
people don't want you to waste time.
No.
You shouldn't waste your time or theirs. Yeah, get prepared. Have the opportunity, prepped, ready to go. Put it in front of somebody. Have all the details.
I mean, our feasibility studies, you guys, that we do are pages and pages of looking at a location, saying, here's traffic count, here's where all the rates are, here's the spread, here's what expenses should be. I mean,
all the competitors, everything. Yeah.
Everything.
All the demographics of everybody, surrounding areas. I mean, no, you definitely need to have those things because, again, I mean, you have to take it very seriously. You're not going to go in and just wing this thing and, oh, yeah, I don't know this, I don't know that, and whatever. I'm just going to try it out and see what happens, kind of a deal. Definitely shouldn't be shooting from the hip, man.
No.
Get dialed in, get accurate, and make sure those deals are as vetted as humanly possible. Because, again, going back to the whole responsibility thing, it's not a small thing, whether you're using your own money, your family's money, investor money,
investors,
banks, anybody.
And two, how much does that help you on that responsibility that 100%. You went and did all the work? So like, even for me in our investment deals, when I go back, it's like, what did we not do if this deal isn't? So we have like on our fund one, we have one deal that has been causing us so many problems. And we've talked to the fund. It's funny. I'm like, this is my problem child. It's not funny because I'm losing my mind over it. And it's cost personally all this money put in. But when we look at it, it's like, what did we do wrong here? And why did this happen? So what is our responsibility? And we're like, okay, well, this roof's leaking and it's allowed us to, we haven't been able to fill up the top 2 floors because of it. And we go, well, then who got it wrong or what happened? And we're going, well, we had 3 engineers verify, 3 separate third-party engineers verify that roof was intact. I'm not a roofer. I'm not an engineer. It doesn't matter what I think. I couldn't do it. So when I look at that, I'm like, all right, we definitely did our work and our part, right? And so I'm like, that's when it comes on to this is investing, where it's like, we had other people. It is all on me, as in the responsibility and the buck starts with me. I don't care who in this company makes a decision. I don't care what third party we have. It always stops with me, always. But I can then look at it and say, we did the right things. This now is folding into something that was uncontrollable on that rooftop and property. And we've got to make the decisions to fix it, to do what needs to be done. We have the right information. It's not what we wanted it to happen or do. We have other properties in that same fund that were the opposite. We have one property where we're like 30% of this property had one type of unit that we were selling. And we met the 6-year projections for revenue because we were trying to kick people out in the first 6 months. Did not expect that. It completely changed the plans on what we were doing with that asset. We were going to do an expansion. We were going to kick this whole part out and do it. But we achieved 7 years worth of rent increases in the first 6 months. All of a sudden now it made no sense to do the actual expansion because we'd have to incur the cost. We'd have to kick them out. So all of a sudden we changed our plans in a good way. It made us way more money and it saved us way more cost and time, right? When we look at that, I also look, what did I miss? And the truth of the matter was we didn't miss anything because there was no examples showing it until we got in and did it. We could have not known that we could have achieved that, right? Bad and good.
Like you just said, the bad and the good, where you're looking at all the bad that could possibly happen and trying to plan for that, but not banking on those things happening. You should also be looking at all the good things that are happening or could happen, but also not banking on those, having that good dichotomy or that balance of what you expect that asset to do. Because how could you have known that we could go in and get 7 years worth of?
No clue. We would never know. It wasn't in the market. It wasn't showing an example. We didn't understand because we couldn't see it and there was no way we could have the level of demand that was there, right?
Yeah.
So there's this nature that after you have bought a deal and you've gotten investors, banks, everybody in it, there is this realm of unknown. What's important, though, is you recognize where that is. So there's certain things that are beyond our control and unknown. Where are those things? And are they correctly out of your control and correctly unknown? The only way you can really know that is if you have third parties, you have verifying people, because I don't know what is the limit of my knowledge and experience. And because I don't know that, I need other people to work with me and help me to make sure I find, no, this is an area that it's out of our control. Like we could have done maybe a billion things, but at some point it's like, I can't change the fact that somebody opened up a 200,000 square feet storage facility there because I don't have control of those. I can't change the housing market. I can't, right? Those are things that you say out of our control. Then you look at what's in your control to make those decisions, right? This is something that investors want to know. They want to know when you're talking to them, what are the limits? What is the bad path? If things go wrong, what's going to happen, right? Now, we've had during the last 2 years, because markets even turned on us, we needed to change the underwriting models completely for our assets because it's a totally new market. This is, we're talking about, we went and bought, $50 million of assets between 19, 21, 22. It was like 100 million assets. The market in those 3 years could not be more different than today. Our business plan has to change with those assets. Mm-hmm. Our underwriting, our valuation, our expectations have to change with those. So then it becomes, we've got to re-underwrite, we've got to relook at this, redo this to make sure that the things that we couldn't control, we are now doing the things that we can control to match it, not trying to be insane and do the same things over that's not working. This is also, though, takes time. So like we waited until the busy season has been over before we were going to underwrite or anything because we wanted to make sure we had an accurate look at everything going on. If you're taking people's money, they are going to be much more, I think, emotional and knee-jerk reaction because they don't have control, which that makes sense. That's perfectly normal because they're like, what's happening? I heard this bad thing or there's news. That's totally fine. You need to accept that. That's okay. When you are taking other people's money, though, you cannot be like that. You have to be patient. You have to look at the numbers, make sure you're actually sure on what's going on, and you can't move and change because of feelings or because of other things happening. These are long-term games. And I talk to people, they're like, well, are we changing it in 2023? And I'm like, the market hasn't even stopped, stabilized. We're not doing anything. We're not selling anything assets. We're not doing anything. And we're 2 years into this. Mm-hmm. We plan to either refinance or to get our 120% return. Refinance, if it's a sell, we want more like 3x return in a 4 to 6 year period. 2-3 years into it, we are only halfway through. You can't make big changes. So that is part of this idea that when you come into it, when you're talking with investors, when you're putting them on a deal, you want to show them the routes. You want to show them what the plan is. And when there's variances, what we might have to look at and do. But before you make those decisions, you want to have confirmation and validation, not only from yourself, but other people, that those are the right things to do with that investment. There's sometimes where you will need to take losses. Cut losses. You don't want to hold on to something that's never going to do it because the things that are out of your control have turned against it. There's nothing you can do about that. That's when it's time to cut loose and walk away, right? Before you'd ever make a decision like that, though, you need to have exhausted everything you could do. And you also need to have confirmations. This takes some of that weight, though, that we were talking about earlier, that it's like, no, I'm not doing this alone. You shouldn't ever be doing it alone. There should be people involved. You need to see things through. You need to be able to try things. The short term, things are going to change a lot. The long term, it's going to be a much easier looking cycle. We've had this with our assets. We bought prior to the Great Recession. You had 2 or 3 years where they weren't doing good. Obviously, if we would have sold them off and walked away, we would have taken huge losses where 2 years after that, they were incredible investments. A 4-year time frame swing went from being terrible, we couldn't even sell them because the market sucked, to incredible. Because occupancies were up and we were raising rates like crazy. Mm-hmm. So like terrible, we're going to lose half our money to we're getting a 3x return in 4 years. So this is the thing when you're talking about being inactive and taking other people's money, though, that you need to be that constant and you need to remember that you are and make the hard decisions. Have those conversations up front. Things that I have done horribly wrong when I started taking on people's money. And this is always changing, evolving. And so we're trying to get better. We're always changing. That's the first thing. Everything you do today, you should do better next year. And I listen to, for me, I listen to our investors. What do you like? What do you not want? You learn really quickly that different types of investors want to see information differently. So I'll have one investor that they say, here's an example of an investor update that I got. I actually really like it like that. You should do it. You have another investor that will say, I don't like it like that. The exact way the other investor wants, I want it different. And I want it like this. these things happen, right? If you're the constant, you need to take in that information and try to make what's best for you, the asset, and your investors. You'll never appease everybody. That will never work. But because you'll never appease everybody doesn't mean you don't not only listen, but you don't change. That is not true at all. They are your partners. You listen to them and you explain them. Now, we have incredible partners. Like, I literally mean it. I've had a bad experience, everybody, with maybe 3 investors, maybe 4. We have over 200. Those were more personal issues. Let me put it that way. And it doesn't mean that things weren't going bad in some cases. It's how they handled it, right? I have investors that would call up when things aren't going good and they weren't going as planned and say, hey, understand it. What's your plan? I'm like, man, we're struggling here, things like that. And they literally, anything we can do? And I'm like, well, not now. We'll get you more information later. And they're great. Hey, thanks for everything you're doing. Let us know if there's going to be a big change or something bad's going to happen. We understand this, right? And they're supportive as partners are, right? And they work through it.
That's awesome.
That's the majority. That's the vast majority. And guys, when you take on investors, that is something I think you should really look at. When you're small, you're going to have a lot smaller amount of investors. So you need to talk to them just like they need to talk to you. When things go wrong, how do we handle that? And do you have an investor that is going to be knee-jerk reaction emotional, simply place blame, and then do wild things? That is the biggest risk you could ever have. I mean that. I think investors and partnerships make the majority, if you look at deals that we'll say failed, it is almost never that the deal failed. It is either the partnership agreement or the structure, as in we had to refinance or we had to sell. And so when we did, we couldn't do that because it was bad timing. So the deal fell. Well, did it drop in income? Anything? No, it was outside things. The deal didn't fail then. The structure failed, right? Now, this is something that obviously happens because people get stuck and they have to do things. But it is important to remember why. We were forced to sell by my partners. I have an investor that didn't care, wanted money out, and he forced the agreement, right? Get it out. That is different than the asset not performing. Very, very different. The vast majority of times, 90%, it has to do with those reasons. It's not that the asset performed. So if I know that, I'm going to structure the deal in a way that if an investor is like, I'm your only investor, so I have to have say, obviously, if I was a beginner, if somebody was a beginner and they asked, AJ, I want $1 million, there's no way I'm giving them all control over my money. They've never done anything else. And nobody would. And you as a beginner investor, to expect somebody to give you all their money when you've never done something and them not have any say, that's unrealistic. It just is. So you need to work with those people and say, what are we going to do when things go wrong? And how does that look? How do we formulate discussions, communications? How are those communications held? How are they appropriate? How are they not? And what limits do I have and you? That all needs to be done with your investors before you ever go into it. Start with the divorce in mind. Contracts are made for disagreements. They are not made for when things go right. So don't build a contract as if everything's going to right. You only build a contract for when things go wrong. Start with the divorce. How do we break up here?
Exactly.
Are we going to handle this good? Is this going to be bad? Who has what power? Can you walk in and force us to do something? Are you an investor that's going to threaten lawsuits and on and on and on, and then you're going to hurt the other investors in there? It's strange to me how some partners or investors, they don't care about everybody else, and they're literally willing to do things that will destroy the asset so they can either win or get their way. That is toxic, everyone. And that is probably the most dangerous thing there could be. You can plan for this, though, now that you know it. And this is what I think I didn't understand with investors and raising capital. I'm like, there's all of these things that I'm worried about. And I was told, well, then just build a contract so you don't have to worry about those. And I'm like, what do you mean? I'm like, well, you don't have to have any of those things. You don't have to do any of those things. And that was when the light bulb came on. I'm like, so all of my main concerns, all of my top concerns that I have here, we can just put in the contract that can't happen or we can't do it. They're like, yeah. I'm like, oh, you just got rid of all my concerns here. Right?
Like, let's go, man.
Let's go.
Let's get it done.
Exactly.
No, I'm really glad that you brought that up because that was one of the things that I'd mentally made note of was that idea, not between like active and passive investors, but those investors that would be partners with you as far as like general partners that would have decision-making and voting power to affect what the business would or wouldn't be doing and then therefore affect you and or any other investors you might have.
Yep.
And just how important that is, not only for the agreement, but finding those right people to invest with and to be those partners with from the beginning to make sure that those things don't happen. Because you said it best that a lot of deals don't fail. It's the partnerships or the structures.
Absolutely. And
it's the humans.
There's a difference, you guys, what Connor's talking about, the general partnership versus the limited partnership. When you're raising capital, there's like two ways that you can raise it. There's more ways than two ways. There's a basic structure though that I'm going to keep at, we're going to talk about. One is like, let's say you partner up with somebody and they're like, I'm going to bring all the money and you're going to do all the work, right? It's going to be great. And so you guys just go create an LLC and you do it. They are active as in they're part of the deal things, but they're not really doing anything. They're just the capital partner. That is, you're just both in the deal. You're both partners. Now let's say that you have those two people, but somebody else wants to give $100,000 and it's a lot lesser of amount and they don't want any risk. Well, then they can be what's called a limited partner. They invest. They have no say in how the deals really ran or anything like that due to the day-to-day, anything else. But they don't take on the debt. They don't take on that risk. All they're risking is that $100,000. So for me, I have limited partners and I'm the general partner. That means all that risk I personally take on. I take on the debt, everything else. People invest with me and they are limited on their risk. Now, if they were a general partner, that's usually not true. And then they have certain rights and certain things that they can do or say. So people will want to be general partners almost always for control. Yes, there is some instances where you can go, we're allocating certain equity to the general partner, but it's almost always because I'm active. I want to make decisions. And when you're a beginner and you need to raise money, lots of times they will demand that. As in, we're not going to allow you to just run away with our money kind of thing, right? Because you don't have a track record. That's normal. That's fine. So they're all going to be true partnerships. Okay. Now, even with the regular partnership, as opposed to the limited partners, you can designate roles. So you can say this partner does this and has this authority. So even within just we're coming together to do a deal, everybody, you should designate authority and role and decisions. Who has what and why and when did these things happen? Who's voting? When does this have to happen? How does this have to? All of that should be. When we have a disagreement, what can they do? What can you do? And how does that get resolved? Do you need to bring in a third party? Do you need to do all of these things, right? What are they? What do they look like? Mm-hmm. And this is how you protect the asset from being ruined by the partners. And this is so important. So very, very important. You need to talk about, you want out, here's how you get out. You want, whatever that may be, how does that look and how is that going to end? That way, when you go into it, you know the rules. You accept the rules. You bought into it. Now you're not worried about all the things you were worried about. You understand where the risk is. You can think through it. You can execute the plan. If there needs to be changes or if something happens, you know how to go about it. It's just a working relationship. We're coming together. We're executing the plan. We're putting the asset first. That's how it should work. And when that happens, it works great. Really, really good. Most of the people that I see that have problems, they are the opposite. It's just a group of people. That's it. A group of people, a group of partners. They don't have big structures. They don't have anything like that. They haven't even thought through any of that stuff. That's where it fails. Most funds, all that, you don't have those problems because it's very structured and there's a way to go about it. And so they tend to not get into issues like that, where one investor will literally destroy the whole part of it. Now, the pros and cons of having investors versus not are very clear and easy. A lot of people have gone over them, and we've gone over them too. I wanted to talk much more about the working part, getting capital, how to prepare for it, because the pros and cons are easy. For the pros, you get more money. You can do more deals. You may not have money that allows you to play in the game, right? There's all these pros that have to do with working with other people. You're all coming together. You can do more. You can do bigger. You can be more successful. You can move faster. You can have more resources. When you're alone, it is the opposite, right? You may not have the money to do it. You may have little. You may have to start smaller. The pros, though, are you get control. You can say everything you want to do, right? Now, if you have a bank, you have a partner and you lose a lot of that control. That's what I think a lot of people starting out don't realize. Mm-hmm. The moment you involve a bank, you do have a partner and you've already lost control, whether you have an investor or not, you do, and you've lost control. And they're going to say, we want you to fund at this amount. We want to get records. We want to look. You got to do it all anyways, right? But you don't have to deal with other people. You get a bank, you're dealing with the bank, you get the property, you can do what you want as long as it's within the criteria that the bank left forward. That's the difference, right? And to some people, though, that's not even an option. I don't have money. I can't do it unless I get OPM, other people's money, or I'm going to go seller finance, right? There's different ways you can do that kind of stuff. But at the end of the day, you're limited and constrained by the source and uses of capital. That is where I see the big differences here. The bad side with the partners, investors are all the things that we've gone over. How you need to prepare. You're going to need to communicate. Some are going to be worried. You got to deal with the people, right? Those are what you might consider bad things, right? Or hassles. At the end of the day, though, once you take on the responsibility, everybody, whether it's a bank, investors, you're taking on a responsibility.
It's all a hassle.
It's all a hassle.
Yeah, it doesn't matter.
You're doing something, you're building something. And so you should do what's best for the asset and your plan, and then construct everything around that. Where am I trying to go? What am I trying to buy? And what are these goals associated with it? I need X, X, and X. Okay, then let's get it in the way that we need it. And then you structure it so it works within your plans and your goals in the right way. Not say, I don't like it, so I'm not going to do it, which that's what I did, which was a mistake, right? I could have had what we needed and also got what I wanted and had those things. I just didn't ever go down the road because of fear and a whole bunch of other stuff. No matter what, you're going to have the responsibility, and you're building a business and you're investing money, other people's money, banks, everybody else's. This is a responsibility. You have a responsibility to your customers, your community. So the rate at which you grow, how you grow, that is personal, what you're ready for, what you're not, and how you want to build up to it. Do not do it alone. Any of it, though. This is not an individual game. It never will be. You will have to deal with the city. You will have to deal with your customers. You will have to deal with banks, investors. That's gone. Getting into the game, you don't have that. It doesn't exist. If you want that, go click on your E-Trade account and buy 50 shares of Apple, or just hand a check to someone that is investing and you're a passive limited partner. That's how you get that. Okay. So the rest of it is the execution and moving forward on what's best for the asset, your goals, and plans.
Man, I love those takeaways. I think we hit on a lot of really good stuff today. And hopefully that prepares all you guys to go out there, really crush it, find those opportunities, bring them in front of investors, raise that capital, boost yourself, boost your wealth. That freedom, impact, progress, man, that's what we're looking for.
That's what we're looking for.
Get after it, guys.
Thanks, everybody.